Good morning. Thank you so much for joining us for our webinar today on measuring innovation in Latin America. My name is Abel Delgado. I am the Marketing Director for America's Market Intelligence, one of the companies that's organized the webinar here today. The other company is, of course, Visa, specifically the Visa Innovation Center. And before we get started, I want to give you a quick overview of what to expect in today's webinar. So the presentation itself is going to last about 45 to 50 minutes. And then after that, we're going to have a space for questions. You can ask us questions at any point in time during the webinar. You don't have to wait until the end. The way to do it is if you look at your screens, you should see a sort of a panel, a sort of a control panel that's a black control panel, and it's going to have icons on it. One of the icons you'll see is going to be the letter Q for question. So you click on that, and basically you can then at that point then just type in your question. It should bring up a little window. You type in your question, you send it to us. We'll receive it, and we'll address them all at the end of the webinar. So moving along here, this is a section of legal disclaimers. I'm not going to read them just because it would take too long, and we want to actually get to the material in the presentation. But when you have a chance, please feel free to review it. It covers a lot of issues in terms of the information presented here today in conjunction with best practices, confidentiality, and also the use of third-party logos. All right, so we get to the structure now of today's webinar, it's basically the agenda. We're going to start off with the introduction of our panelists. After that, we're going to look into the project background and then get into some of the results, some of the most innovative regional results, and then sort of an insights into the state of innovation in Latin America to wrap things up, and then we'll get into your questions. So in terms of our presenters here, first off, we have Roberta Isfer, who is the Innovation Experience and Content Director for the Innovation Center for Visa in Miami. And then we also have Lindsay Lear. She is the Payments Practice Leader for America's Market Intelligence, the company that actually did the study and got the results that will be shared here today in the webinar. So for now, I'm going to turn things over to Roberta so that she can walk you through the project background and take things from there. Roberta.
Hi. Good morning, everyone. Thanks for joining this morning. I'm Roberta, part of the innovation team for Visa for Latin America. Here at Visa, we're a network of innovation centers with locations in 12 markets today, including studios here in Miami, where I'm based, Mexico, and Sao Paulo. This network enables us not to only leverage and amplify innovations from one place to the other, but also as a window to pick up trends in a given market and track them closely to anticipate change that could transcend borders. So part of the work that we do here at Visa, at the Innovation Center, is exactly thought leadership. And to check from time to time what's going on, what's the thermometer on what's happening in the industry. And this is why we're here today. Latin American Caribbean region is ready for disruption. We have more than 400 million smartphone connections, a critical mass that is spurring digitization across the industry. We see a lot of new digital players leveraging mobile to introduce these new consumption habits. There is an emergent shift with consumers and companies, and we are more focused more than ever, everybody and every company, in designing solutions and products with the connected consumer in mind, right? And the good news are Latin America consumers are ready to adopt innovative ways to pay as well. Our digital evangelizers, new digital banks, they're all teaching Latin Americans to transact over the mobile channel, to prep them for adoption of the next generation of payments, P2P, QR codes, NFC digital wallets. So as digitization advances in our region, we at Visa wanted to better understand how far along it is in Latin America and how entities in our industry are preparing themselves to compete in this fast-paced, evolved market. So we partnered with American Market Intelligence to design the study and figure out just how innovative the region's leading companies are doing. Our partner, AMI, who conducted the research, is a market intelligence firm specialized in the payments industry in Latin America, our good partner since 2015, and a trusted advisor to companies wanting to navigate this rapidly changing digital payments environment. With that, I'm excited to share with you what we found is very illuminating. The region is ready for innovation. Consumers are ready for innovation. And you guys are going to see that companies are also ready. So I would like to turn over to Lindsay right now, who will share the top insights we have gathered.
Thank you very much, Roberta. Good morning, everyone. My name is Lindsay Lear. As we mentioned, I represent AMI, research firm, close partner to Visa in everything related to strategic research and market intelligence thought leadership. We were very honored to participate in this study, a very exciting initiative, as you can imagine. And today, we will walk you through the methodology we used to conduct this study and some of the high-level results. So to kick us off, so that you understand a little bit about how we conducted the study and how we went about evaluating innovation in Latin America. We conducted this study throughout 2018 with 85 organizations across Latin America in the markets you see here on the slide. We spoke with financial institutions, merchants of all different kinds, and also new ecosystem players, kind of a catch-all category that includes payment aggregators, facilitators, non-traditional competitors in the payments industry, including new fintechs. So we had a very diverse set of participants to inform our research. Now, when we're thinking about innovation and evaluating innovation, we, of course, had to come up with something that was different from what was already out there. We did research to understand what kind of innovative studies already exist on the global scale. We wanted to design something that would be specific to the payments industry to help inform our clients and our collaborators who are operating, as Roberta said, in this highly evolving, digitizing financial services sector. So to do that, we came up with all of these indicators that we thought would be interesting to understand innovation and organize them within this conceptual framework that you see here. So this helps us understand how we define innovation, how we are understanding innovation, and how we're going to measure it. So we also organize the results according to this framework, and that will become clear as we walk through the presentation today. So we see internal support for innovation, execution, how well your organization is able to execute on innovative ideas within your company, the use of technology, how well your company is adopting cutting-edge technologies in your industry, and finally, current footprint and the potential impact you might have on the wider ecosystem. So those 4 pillars will guide our discussion today. Okay, so before we get into the results, I want to make sure that you all on the line are engaged, and we'd like to hear a little bit about you today. So we have several poll questions. Our first poll question, so we can understand where you're coming from today. What type of company do you represent? So please take a moment to answer the question here. Are you a bank or issuer, acquirer, or payments processor? A merchant, a fintech or other startup, a card network, or maybe something else? So please take a moment to respond to the poll. After a few more seconds here, we will close the results and get a good idea of who is on the line with us today. Okay. Great, just a few more seconds to respond. Let's see what the results were. Okay, we have a good spread. Great participation from banks and payment processors, also fintechs with us today, and quite a bit of catch-all kind of in the miscellaneous category. Thank you very much for your participation there. We'll have several other poll questions throughout, so thank you. Okay, so this first section, as we dive into our results, it really captures the high-level findings of our study. And this slide is really driving home our key message, the key insights that we captured from our research. What we have here are the main characteristics of innovative organizations in Latin America. Through our interviews and through our research, what we discovered was that the most innovative organizations in Latin America share a common culture and common principles, characterized by collaboration, openness, and transparency. So you'll see that reflected here in some of these indicators. Deeply integrated with startups, an API-based approach, collaborative working spaces within their offices. The innovative companies in the region are working collaboratively within their organization and with the wider ecosystem to promote exchange of information, creativity, experimentation that enables the rapid adoption of new technologies, the ability to come up with new experiments and fail, the ability for those to be able to fail and not have negative ramifications to spur creativity and experimentation. And that culture is supported in several different ways. So we'll look into what those ways are and what the different metrics are that support that type of culture. Going on to the next slide. Diving a little bit deeper into the actual metrics that create that collaborative culture I was just mentioning, we can, throughout the research and presentation, we compared the top 20 most innovative companies with the wider sample. When we do that, we see very interesting and very clear discrepancies. You can see several examples here. So the top 20 most innovative companies had more than double the number of collaborations with startups, just revealing that openness and desire to complement your internal capabilities with capabilities that may not be so strong and that you find in an external player in order to enhance your overall ability to operate in the market. Almost triple the amount of APIs. Very quickly, more active and more quickly able to develop and launch proofs of concept. So we kind of see these very clear distinctions in behaviors and characteristics between the most innovative and the sample overall. Similarly, we have some additional indicators here that really capture what our most innovative firms look like. Again, we have more rapid and deeper penetration of new technologies within the most innovative companies. On the most basic side here, we see the use of data analytics. 95% of our top 20 companies are using data analytics compared to 88% overall. That is not so large of a distinction because data analytics is quite a broad category that goes from basic to very sophisticated. But as we go down the continuum on this slide, we become increasingly sophisticated in our technology all the way to blockchain, where we have a greater distinction, a greater differentiation, and fewer companies utilizing the most advanced technology that we have here. So greater adoption and more rapid adoption of the technologies taking place in the industry among the most innovative. That gives you a high-level taste of some of the results and a feeling for what our innovative companies look like. And we're going to go into more detail here, looking at each of our 4 pillars. Again, a reminder to our audience, please share your questions with us at the bottom of the panel. You can submit your questions. We're interested in hearing what is interesting to you, where you'd like a little bit more detail. Okay, so diving right into internal support for innovation. Of course, to be innovative, you have to have an internal structure and culture that supports innovation. So we wanted to understand how are the region's companies embracing innovation at a structural and corporate level. And the simplest way to measure that, and the most basic way, is do you have an innovation team? Do you have a team or resources dedicated to innovation? The good news is almost everyone we spoke to has incorporated innovation into their corporate structure in some way. However, there are several different models and levels of depth and commitment to innovation that we observed in the region. You can see that, this chart here shows that among our most innovative and financial institutions, 80% of participants already have an innovation team, an explicit innovation team. Others have, yes, we have an innovation team, but it's not necessarily explicit, and I'll explain what that means in a moment. So we can see levels of differentiation between the company types, but overall, everyone understands and knows that innovation is becoming increasingly important to their success in the marketplace, and they need to be incorporating it to some degree. On the next slide, we can see what this looks like in a little bit more detail. As we spoke with our participants in the study, we saw that 2 models very clearly emerged, one that we call explicit and one that we call integrative. The explicit model is one in which you have an explicit innovation staff, maybe a chief innovation officer. You might have a specific innovation lab, or at a minimum, specific offices for your innovation team. This is most common among traditional companies who have been around maybe 100 years for some of our banks in the region. And to become to remain modern and up to date, they have needed to add on this capability of innovation. And so they built infrastructure in an addition on top of their corporate infrastructure as it exists. On the other hand, we have the integrative approach, which is more common among companies who are born more recently, born as digital natives. These companies have innovation built into their DNA. They understand that they are coming into an extremely competitive digital environment, and they need to be innovative in order to disrupt what is currently going on in their market. So we saw this model common among digital native merchants, fintechs, and other startups, technology companies in general. And what characterizes these companies is that they have, instead of an explicit innovation center, they have an open floor plan. They have developed collaborative spaces for teams to work together, different teams to work together. They've integrated innovation into their office culture, and innovation is in the job description of almost everyone at their company. So depending on how your company is structured and your history, you may need to incorporate innovation in different ways. But we can see that our digital companies have this integrative approach, and our more traditional companies have this explicit approach. Great. Looking at how we're starting to look at how we're developing and using technology to interact with our ecosystem. The number of APIs. This was very interesting to compare companies amongst themselves. We can see a very clear continuum from on the use of APIs from our digital forward merchants, basically companies that are mostly digital in nature, down the chart all the way down to financial institutions who struggle to adopt an API-based approach compared to their digital competitors or digital peers. The overall, you can see the overall regional average for number of APIs is 48. That's more than triple at 155 among our digital companies. And also congruent with that are the percentages of APIs that are open. So are you using APIs, open APIs, to exchange data, to make your information available to developers and your wider community? Are you engaging in that exchange of information to help create capabilities that are not existent today, but through the use of partnerships can be made available to your customers and internal clients? So this was a very powerful indicator. On the next slide, taking a look at, we mentioned at the beginning of the session, excuse me, the importance of partnerships with startups. Now, especially in the financial services sector, we know that fintech in Latin America has begun to revolutionize financial services, and banks have become very aware that they need to partner with startups and fintechs in order to remain competitive in the marketplace. And as a result, we see here financial institutions have an average of 9 partnerships with startups compared to merchants who have about 5. Now, merchants is a very diverse category. You've got your traditional supermarkets and other brick and mortars compared to your most kind of disruptive digital-only companies. On average, however, merchants are partnering at a slower rate. But when we look at our most innovative companies, we see almost 3 times the number for merchants and almost double that of financial institutions at 15 per company. Now, of course, partnership is a term that can mean many different things. So if we go on to the next slide, there are 3 main models for partnership that we observed. One, the most basic and the easiest, is simply the supplier model, in which a startup sells you their goods or services. So the majority of partnerships that we observed were simply this supplier model, in which a bank or a merchant understands, oh, this startup has a great capability that I would like to leverage. I'm going to partner with them, use them as a supplier to gain access to their technology and their capabilities. That is clearly the fastest and the easiest way to work with a startup. We also saw, most common among financial institutions, we saw a little bit more of a hands-on approach in the form of incubation or direct investment. That's when, you know, it has become very common for financial institutions to have their own labs or their own accelerators, work with startups directly, incubating them, investing in them sometimes to gain control or gain access to that technology and really bring it in to your corporate culture. So the model that you choose, of course, will depend on how agile you can leverage that startup. The supplier model is the quickest. Certainly, it's the least hands-on and the least involved. The investment is the most complex. So depending on what you're trying to achieve, you may choose one model over the other. But what we really saw was that the most innovative companies are looking for companies who can help compensate their weaknesses. You know, we're weak in this area. We need a technology and a capability to help us in this one area. So who in the marketplace can help us fulfill that need? Okay. So we've seen a lot of numbers just now describing internal support for innovation. So I'd like you to take a moment to think about your own organization. So based on these results, how would you rate your own organization's internal support for innovation? Now, please rest assured that this poll is anonymous. No one will get access to your answer, so please feel free to respond honestly. Just like to get an idea of how these metrics work for you, how you might rate yourself or your own company according to some of these indicators that we've just taken a look at. We'll take just a couple moments for everyone to get an opportunity to respond. Okay, let's take a look. Okay, very interesting. We've got a really good spread between, you know, very robust at 15%, average at about 25%, among the least innovative 13%. So a really great distribution. You know, I'd be very interested later to follow up with some people to get a little bit more intel on that. Thank you very much. That's great. Okay, so moving on to our next conceptual pillar of execution. This is a very important complement to internal support for innovation because, you know, one thing is to support your organization internally. Yes, we want to innovate. Yes, we want to have those capabilities. Yes, we want to promote experimentation. We want to create and bring new innovations to the marketplace. Now, execution is the other side of that coin. How well are you able to execute on what you're doing internally? How well are you able to actually create products and functions that will be interesting to your customers and bring them to market? So it's very important to weigh these two pillars against each other. This slide has a lot of data on it, but it's very powerful when we take a moment to look at what this means. So we have three key indicators that measure execution on this slide. The number of proofs of concept developed in the past 3 years, the percent of those proofs of concept that went live, and the average time it took from conception to launch of those ideas and proofs of concept. So three really important ways to measure execution here, and we compare them in three different groups of participants. We can see very clear differences. Our most innovative companies excelled in proof of concept development. They were also the most efficient or effective at bringing those to the market, and they did it in the fastest amount of time. Almost, if you compare the top 20 with all entities, the sample overall, you can see, you know, almost triple or double the performance. So really powerful indicators. Our digital natives here in the middle look and feel similar to the top 20, but it's important to understand that among our most innovative companies, we had as well also several brick and mortar companies that it was a pleasant surprise to us. So you don't have to be digital to be innovative is a very important takeaway from this study. So this continuum here kind of displays these very powerful differentiations we see. If we go to the next slide, we can see this broken down in a little bit more detail. These three indicators by company type. And we see our new ecosystem players really doing well in this category. And this makes sense because these companies tend to be smaller. They tend to be more agile by nature. They tend to be more able, have many of them are startups and fintechs themselves who, as we spoke to a few moments ago, have innovation and innovative methodologies as part of their integral structures and culture. So they're extremely active in experimentation and developing proofs of concept, and the fastest in bringing them to market. Merchants also do well here, probably promoted by our forward-thinking digital merchants who are very effective at bringing those proofs of concept to market. Our financial institutions are perhaps they have the worst performance here, and worst is a strong word, slightly behind their other peers here. And that also makes sense because some of our banks and financial institutions in the region are the most traditional organizations we have in Latin America, with, again, some of our participants being around for more than 100 years. And so these are massive organizations that can be slower to move. So when we look at this breakdown, it in one way makes sense based on the type of company they are, and also gives us an indication of where there are room for improvements. Okay, so if we take a look at the next slide, here we kind of take a look specifically at merchants, because of course merchants are doing things, innovative things beyond just payments. There's so many ways in which to innovate when we're looking at commerce in general. So a moment ago, we were looking at payments-related proofs of concept. Now, when we take a look at merchants, we're looking at any type of experimentation or innovation within your organization. And again, we can see these blue bubbles at the top, the differentiation between our sample overall, our digital forward merchants, and our top 10 most innovative. So once again, our most innovative is performed slightly better than our digital folks. Once again, pointing out that you don't have to be digital necessarily to be innovative. That's a very powerful insight for our folks on the line who are not digital native startups. Where are merchants innovating? Of course, there are myriad opportunities for improvement and innovation within a merchant that has, payments, it has products, it has logistics, it has all of these different areas to manage within your business. So some of the, anecdotally, some of the things that we saw that merchants are doing are very exciting, kind of fall into these four categories. Self-service. How can I improve and speed up the checkout process, which is in Latin America, as we know, can be very onerous. And this all has to do with this is the area that most directly has to do with payments, enabling customers to take ownership and take control of their checkout experience. That helps promote and enhance the user experience and customer experience in stores and online. But we also see innovation and technology across other areas, inventory and logistics for e-commerce companies or companies that are getting into e-commerce for the first time, figuring out what is the best way for me to have excellent fulfillment of my goods. Incorporation of artificial intelligence, machine learning, and big data, which can be used across multiple areas in your company. We're starting to see automated customer service, personalized product search, especially on your online website, and in customer service and customer satisfaction. Finally, kind of on the most basic side, we have web and app functionality. About 30% of our merchants that we spoke to do not yet have a mobile app. So, and there are, of course, varying degrees of sophistication among the mobile apps that do exist. So coming out with new versions of their apps, new capabilities, mobile responsive websites, enhancing your mobile e-commerce platform, and as well as chatbots are all things that merchants are focusing on to deliver a digital experience for their customers, drive digital engagement and loyalty, and provide a better touch point and seamless user experience for all their customers. Okay, taking another look at merchants, An additional way that we measured execution is how well are you operating in the e-commerce space? Because certainly that is the area of retail that is growing most rapidly in Latin America, and that will continue to grow in relevance compared to brick and mortar. So as we mentioned, 94% of our participants already sell online. We did have a few that do not. And 68% of our participants have a mobile app, meaning about a third of companies still do not have a mobile app. And of course, what that means is because we have this very diverse group of merchants, the intensity of use of e-commerce and mobile commerce is quite different. So we can, here at the bottom, we can compare the percent of your sales that are made online. Clearly, this is most pronounced amongst our digital forward merchants. We say digital forward because they still probably have a small brick and mortar presence, but they are mostly an online company. Compared to our top 10 most innovative merchants overall, and our brick and mortar merchants, primarily brick and mortar merchants. And that's where we see, 7% of our retailers, 7% of their sales are made online. That's a very key statistic that a lot of us try to look to in Latin America. And then we also see a clear differentiation in the percent of those online sales that are conducted over the mobile channel. Okay, so for our traditional retailers, 18% of their e-commerce sales are made over the mobile channel, compared to 41% for digital forward companies. So just some really interesting data points there to show how digital your company reflects how engaged you are with your customer over the mobile channel. Very intuitive. But we also don't see poor indicators on the brick and mortar side. So really just interesting statistics here that we got from the study. Okay, excellent. Moving on to the use of technology. Really interesting slides here that will give us some insight into how technology is being used by the industry. This first slide captures information on data analytics, artificial intelligence, and machine learning. These are areas in which everyone in Latin America is still learning. We observed that most companies that we spoke to, most of the leading companies in the region are still in an experimentational phase with machine learning and artificial intelligence. We can see here at the top chart, AI and machine learning in the light blue. About 50% of financial institutions are using these, 63% of new ecosystem players, 80% of the most innovative companies are already using AI and machine learning. So we can see that there's a clear difference between the sample overall and the most innovative. However, more anecdotally, we observe that almost everyone is just trying this stuff out. They're trying to figure out, how do we use it? What are the best use cases? Where does it add the most value? What are the different providers or internal capabilities that I need to develop to enable this technology? How do I make the most use out of this? On the data side, many companies are only just now understanding that they need to capture data and that they need to analyze it. There is a huge learning curve that most companies in the region are still climbing. So, as we conduct this study again this year, and in the coming years, we're very interested to see how the complexity of usage of these technologies change, what type of use cases are coming out of it, and how committed companies are, or how central these technologies become to companies' operations. Because currently, it is really in a fringe kind of, we're trying this out, we're trying to see if this can help us, but it hasn't been brought into our integral function quite yet. We'll look at a couple of these technologies specifically. So chatbots. Overall, about 50% of our sample was already using chatbots. Pretty decent penetration here. And that goes up to 75% among our most innovative. However, the use of chatbots is still quite superficial and with selected use cases. The most common being in customer service, providing an additional channel of communication for your customers. And that's really what we've seen in the US as well. Chatbots have been most rapidly adopted for customer service. Very few examples of transactions taking place over chat. This will, I anticipate this to change in the next year as we're seeing more pilots, more products being introduced to enable payment and the exchange of financial information over a chat platform. So this is a learning curve for consumers as well, getting them comfortable and helping them to trust that channel, and we'll see that evolve throughout the year. Blockchain. I get a lot of questions in my day today. I get a lot of questions of how is blockchain being used in Latin America? And the answer is it's not, or it's being used very little. Overall, 8% of our entities that we talked to were using blockchain. That number rose to 25% among our most innovative companies. But again, blockchain is in extremely early stages. What we learned in our discussions around blockchain is that there's still a lot of confusion between cryptocurrencies and blockchain. A lot of, I'm not quite sure what blockchain is. I think it has to do with Bitcoin, and that produces fear for a lot of companies in the region. So there's still a lot of learning to be done about how blockchain can be utilized, what the use cases are, what the value is, and of course it is an extremely disruptive technology that the ecosystem still needs to learn about quite a bit. The experimentation that we did observe took place almost only in Brazil. There were maybe 1 or 2 other cases outside of Brazil. But financial institutions and 1 or 2 retailers were starting to experiment with blockchain. But again, this is something that is very fringe and very nascent still. Okay, looking at our issuers. Now, I know we have a lot of financial institutions listening today, so this might be particularly interesting. We notice that the most innovative issuers are those who have diversified their card portfolio. So we see 4 different capabilities within your credit and debit card portfolio, and we can see that the most innovative issuers outperform their traditional competitors in almost every category. You know, penetration of contactless cards, cards that are enabled for e-commerce, and cards that are enabled for cross-border. And perhaps the most powerful indicator here is the difference between for debit cards enabled for e-commerce. You have 90% versus 58%. Now, debit cards, because they are more widely accessible by the greater population, are a very powerful tool for access to digital payments and expanding the digital payment pie. So banks that are able to diversify and technify their debit portfolio are going to be larger players among a wider group of people and have greater access to expanding digital payments overall. So debit we have found as a powerful tool for having a larger impact on innovation more widely. Okay, let's move to the next slide here. Looking at how issuers have adopted technology. We see that, we have several different technologies here, digital wallets, QR codes. We again see that the most innovative issuers have adopted these technologies more rapidly and to a greater extent than our overall sample. And we can see, again, that these are all still in beginning phases. You who are in the industry and the region understand this. There are many digital wallet products available. However, their traction is still quite limited. So as more banks become more familiar with these technologies and start to adopt them, we'll see that grow, and we'll see that being pushed out to consumers at a greater pace. Looking at acquirers. Again, we have a variety of technologies being adopted by acquirers, but still a lot of work to be done in the usage. So for example, we have across all POS terminals from the acquirers we spoke to, 68% of those are contactless enabled. However, when we look at volume, only 5% of volume processed by these acquirers is made with a contactless payment method. So one very distinct insight that we tend to see with acquirers is you may adopt new technology and enable new technology for your customers, but the level to which that is being adopted by consumers may be very different. And so innovation also is closely tied to how well are you pushing that down the funnel to consumers, and how well are they adopting the technology that you're offering to the market? Okay. Now taking a look at merchants, how are merchants adopting different technology? Like, again, there is a wide variety of technologies we can look at, but here we can see the differences between brick and mortar and e-commerce merchants. We have a wide spattering of technologies here. So some Bluetooth beacons, which are considered a very advanced technology in retail at 0%. Up to QR code, which is starting to be more and more visible in retail across the region, up at 53%. So again, we'll continue to monitor these and have updated results in the new edition of the study. Okay. One very significant and really exciting trend among merchants is the transition toward becoming a marketplace. And again, what is a marketplace? A marketplace is a platform, an open platform on which others can provide goods and services. So this, the marketplace mentality kind of embodies what we said at the beginning about opensea and transparency and collaboration. And so what we found to be very exciting was that 90% of the merchants we spoke to either are marketplaces already or are developing marketplace capabilities. So we have a sampling of companies that are already full marketplaces. They were born as marketplaces. Then we have other companies that, traditional retailers who realize we want to dedicate a part of our website to third-party sellers so that we can offer our customers a greater variety of goods. And an additional set of merchants realize they need to do this and are starting to develop marketplace capabilities. So merchants across all verticals are moving toward this open source platform model. Very exciting insight there. Okay, we have another poll question. We just went through a lot of content, so please take a moment to engage here on the screen. In which technology is your company currently investing the most? Is it artificial intelligence, machine learning, big data, blockchain, or perhaps something else? Please take a moment to let us know where your company is most interested or where it's already currently investing the most. Okay, let's see our results. Okay, we have a great distribution. Artificial intelligence at 19%, blockchain at 17% of folks responded. That's excellent. Machine learning and big data. And quite a few people said something else. So I'd love to hear what that something else is. Feel free to write in the questions or comments section if you have any sound bites you'd like to share with us. Thank you. Okay, so we have made it to our fourth and final pillar, current footprint and ability to scale. What we're trying to measure here is how big of an impact do our participants have on the wider payments ecosystem. And what we saw was that companies across the region generally have difficulty scaling across borders. This makes sense. It's difficult to export your business to another company because of regulation, the difficulty of integrating with the banking systems, and especially if you're a brick and mortar company, acquiring or setting up infrastructure is exceedingly difficult and costly. So for that reason, we see our most innovative companies spanning the greatest number of markets, followed by our digital natives, and the sample overall below that. So scaling continues to be a challenge. Digital companies are the best at scaling because they have the lightest footprint and are able to reach customers without having a physical presence in the country. So we see that reflected in these numbers. Okay. Finally, scale is also measured not only by where you operate, but how deeply and often you are engaging with your customers. So the data we have here is the % of app users who are active in the past 30 days. And surprisingly, we have the best numbers from our issuers at 63%. Now this number is really propped up by our digital only banks, who digital and mobile is the only channel over which you can engage with your bank. So that's a really powerful statistic. On the merchant side, only 30% of users are active in the last 30 days. And that number is dragged down a bit by merchants who don't have a mobile app yet. So we have some differences here according to what type of company you are. But important to understand that scale doesn't necessarily mean physicality. Scale is how many people can you impact, and how often or how meaningful is that impact and that engagement on a daily basis. Okay. Another poll question here. Please tell us, we have kind of come to the end of our study results. So that's all we have to share with you for right now on the actual results of the study. So I want to hear from you, considering all of this and reflecting on your own experience, within your organization, what are your greatest barriers to innovation? Insufficient budget or other resources, internal corporate culture, a lack of know-how, regulation, or something else? Please let us know. Where are you struggling? What are your challenges to innovation internally? Okay. Be curious to see the responses here. Okay, let's take a look. Okay, not surprising is insufficient budget or lack of other resources, 44% of respondents, followed by internal corporate culture that may not support innovation at 37%. Regulation is only at 14%. That's also interesting. Excellent. Okay, thank you. Okay, so in our last few minutes of content here, I just want to take a moment to take a step back from the results of the study and extrapolate a little bit. What does this mean as we go forward looking at innovation in Latin America? If you go to the next slide, one thing we learned that is very important for understanding how to operate in Latin America is that, as many of you know who know the region well, to succeed in Latin America, innovation does not necessarily mean high tech. Okay, we have a lot of examples from our participants of online, offline hybrid solutions that cater both to a tech-savvy customer and a customer who is more used to traditional methodologies. And very often in Latin America, the most successful fintech solutions are often low-tech in nature. So we've seen a lot of innovation not dependent on high technology, but also innovation around your business model, innovation around your channel, your channel strategy. So how are we accessing customers? How are we delivering services? How else can we get our service and offerings into the marketplace that doesn't depend on high technology, actually? So some really interesting examples here, and a very important thing to keep in mind: innovation does not have to be high tech. Okay. Going on to the next slide is, now that we have all this information, who will be the next payments disruptor in Latin America? When we look to other world regions, specifically Southeast Asia, which can be similar to Latin America in some ways, we see examples of ride-hailing companies, Grab and Gojek, making a pivot, making a successful leap into the payments industry. What do these companies do? They're an open source platform in which others provide their goods and services. And through that, they develop a highly engaged customer base and are then able to provide other goods and services that are separate from their core offering. So that creates both competition and opportunities for partnership in payments. So who are those platforms in Latin America who have a very engaged user base, who are prime to offer payments and other services? This is already happening in Latin America. We have some examples here on the right, and that we can only expect that this will accelerate going forward. So it's going to be our digital technology-driven platforms that are most engaged with consumers and who are best able to deliver a wide variety of products and services, including payments. So for those of us in the payments industry, looking to companies like these to partner and empower will be important to our ability to remain innovative. Okay. Finally, this is our last content slide. As we wrap this up, regardless of the adopted model around innovation, a few key messages we want to drive home for you today. The first is, we've underscored this throughout the presentation, but collaboration with the ecosystem produces efficiencies and speeds time to market. So instead of being closed and fearful of the ecosystem, we want to encourage companies to be open and excited about participation, being very confident in your own strengths and what you do well, and looking to others to help compensate on areas where you might be weaker or simply don't have the know-how, and together creating something that's even more powerful when you're in the marketplace. Innovation should be embedded into your operations and processes. So it's one thing to say that you're innovative. It's another thing altogether to build innovation into your corporate culture so that you just are innovative. When you have innovation built into your culture, into your processes, into your job descriptions across your organization, innovation flows more naturally, and you don't have to try as hard to be innovative when you already are innovative at your core. AI, machine learning, and other high technologies that we mentioned will be increasingly prevalent across payments and commerce globally, and we need to start to take these technologies more seriously and figure out how are they adding value, what are the best use cases where I can incorporate them, how are they going to disrupt the business, and how can I take advantage of that, okay? And finally, as companies are finding new ways and new channels to interact with customers, commerce will be taking place in unlimited ways, and commerce requires a payment. So as folks in the payments industry, we have to be able to adapt quickly and respond quickly to how and where consumers want to transact. So who is able to accommodate the customer who wants to pay in a new way and over a new channel? These are the questions that our innovative companies in the regions need to be considering and taking very seriously as this competitive environment heats up. Okay, so our final poll question for you today. As we go forward and as Visa and America's Market Intelligence want to engage with you, folks who are on the line today, which innovative methods are you most interested in learning about? Adopting agile methodologies, developing and utilizing APIs, working with startups, developing and launching proofs of concept, or incorporating new technologies? Please let us know which one sounds most interesting, which one you would like more support on, which one you would like to know how to do. This will help us understand where we're at as a region and be able to engage with you more effectively. Okay, we see the highest in incorporating new technologies at 50%. Excellent, that's very interesting. Followed by developing and utilizing APIs, 32% of respondents. Terrific, thank you so much. So at this time, we have reached the end of our content. Thank you so much for your attention. We had several questions come in, so I'm going to invite Abel to lead us in the moderation of some of your questions.
Yes, thanks, Lindsay. Yeah, we did get a number of interesting questions. So let's go over a couple of them here. One of the first ones is going to be, where do you see the technology moving faster? Is it moving faster among banks, or is it fintechs trying to partner with financial institutions? Where are you seeing the speed happening with the technology?
It's a good question. You know, it's hard to understand. It's hard to measure faster, right? Where is technology moving faster? What we see is that startups and fintechs are best able to adopt and create and adopt technologies much more rapidly than banks. Banks are in their majority operating on legacy systems, and incorporating technology is operationally risky, it's costly, it puts their whole, to replace or supplement a system with a new technology is a very difficult process, and banks don't always know how to do it. So adoption, I would say, is faster among fintechs and startups, but increasingly banks are working with startups and leveraging technology at an accelerated rate through their partnerships with startups. Roberta, if you have anything else there, I'm not sure if you have any
You
other
know,
insight.
I agree with you. I just wanted to share that at least here in the work that we've been seeing and working with partners at Visa, at the Innovation Center. Again, I don't think it's a matter of faster, it's a matter of collaborative. So what we're seeing is the more we partner and we find the right partner to be together. So, and most of the times is actually bringing together banks and fintechs, because not necessarily everybody has the solution. It's not one bullet to solve for it all. So what we're seeing more and more is actually the partnership, and that's the way that innovation is actually moving faster when you partner. So I would say when banks and fintechs actually come together, that's where you see the speed happening.
Mm-hmm.
All right. We have another question about the role of government. Actually, it's asking what we've seen in terms of the governmental side. Has there been any sort of collaboration or support to push innovation in the different markets in LATAM?
Great, from Salvador. Great. Hi. Yeah, the government. This is of course very important. Now, governments, in many ways, where we've seen the biggest push from governments is in financial inclusion and pushing digitization of payments overall, because governments, their main interest is increasing their tax base. And so we've seen a big push from governments across the region to a lot of different mechanisms to increase the use of digital payments. Now, innovation in and of itself, at the city level, we see city governments sponsoring startup hackathons and startup competitions, trying to build the startup ecosystem with grants, financing, financial support for startups. So we have seen a lot of that taking place at the city level. Now, what might be the most powerful enabler of innovation is what central banks are doing to open up the acquiring and processing space and create a framework to allow new technologies to take root. So, in Argentina, in Chile, this happened several years ago, in Brazil, regulators getting involved to break up acquiring monopolies and enable greater diversity and competition in payment processing, which will allow new competitors and new models to flow in. We've got the fintech law passed in Mexico. We have a P2P and real-time payment legislation currently being negotiated in Brazil, which takes some time to have real implications in the market. But what it does is create the conditions for an open dialogue and standards to be created that will provide conditions for security and trust, and for those technologies to become commonplace and mainstream. So governments definitely are having a very important role.
All right. Another question here that actually is referring to blockchain. It's not really framed as a question, but the person who posed would like to hear more about blockchain in Latin America and how it isn't being used. Of course, we covered that to an extent in the slide, but maybe we can elaborate a little bit more about that sort of thing, how blockchain is being used and isn't used in Latin America, maybe the missed opportunities.
Right. Well, the most readily available use case for blockchain and cryptocurrency is cross-border value transfers. Some banks are, specifically in Brazil, are using blockchain to exchange currencies and make international transfers, and also domestic transfers. Again, it's an extremely new thing, and banks are still trying to figure out how to use it. We saw a couple of isolated examples of smart contracts based on blockchain in the insurance industry. But again, really limited and isolated examples. And I'd be happy to speak more candid or more in depth on that with whoever asked at a later time, because it is very isolated. It's hard to come up with sort of industry trends so far. Roberta, if at Visa, if you guys have seen any specific use cases that I didn't mention.
Yeah, no, I think cross-border definitely is one. We're seeing more and more, and like you said throughout the presentation, everybody's learning as it goes, and we're seeing more and more the usage of it. There's a lot of interest in better understanding. It's crucial to define the differences and bring more clarity between blockchain and cryptocurrencies. But I think we as a region are learning. So we'll probably see more use cases coming soon. I think over the next year or so, we'll probably be seeing more for sure.
Okay, well, we are just about out of time, but we can maybe try to answer one last question before we wrap up. And this one is regarding innovation in Colombia, because the person who posed it noted that we talked about Chile, Brazil, Mexico in the presentation, but would like to find out a little bit more about Colombia specifically and the level of innovation happening there.
Great. So Colombia is a really interesting market. It's one of our most cash-based economies. So when we look at the penetration of cash and brick and mortar, Colombia is one of the highest at over, I have to look at my data, but high 80% in cash usage. So in many ways, innovation has been delayed in Colombia, especially in payments. But of course, we have some of the region's most exciting startups in Colombia, Rappi being the #1 example. So also several banks in Colombia are doing some really exciting things. So there's still a lot of work to be done there to shake up the financial services industry and challenge incumbent players, bring in more fintechs and more flexible business models. Like we've seen in Mexico and Brazil, we've seen a lot more movement in those markets, and this is kind of only beginning in Colombia. But again, because it's such a highly cash-based market, but at the same time an extremely mobile-ready market, there is extreme opportunity in Colombia, perhaps more than Brazil and Mexico, where we already have some more developed phases of fintech and startups. So I would encourage, same with Peru, I would encourage companies to look at those markets very strategically when we're thinking about innovation and disruption.
Yes, and to your point about Colombia too, Lindsay, it's good for the attendees to know there's a white paper that covers the state of in the white paper itself that sort of drives this webinar. We do cover Colombia and the state of innovation within there in a specific section. We focus on different countries as well. So that's among the results. And what we're going to do is at the end of the webinar here, actually within the next 24 hours or so, we'll be sending out a copy of the webinar and the slide presentations from today, as well as a video, so that you can then have that as a resource. So you can need to watch it over at your leisure, the video, and also refer to the white paper itself. The white paper covers a lot of these, actually all of the results that are presented here today. And so that way you'll have another sort of a takeaway resource. That pretty much does it as far as our time. So we'd like to thank you all for joining us and hope that you can join us again for future webinars. And in terms of your questions, we didn't get a chance to get to all of them. We'll have the panelists look over the questions after the webinar and see if we can send some answers to you in a written form after that as well. Thank you very much and have a wonderful day.
Thank you, everyone.
Thank you, everyone.
Take care. Thank you.
Bye now.
See you soon. Bye-bye.